financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist and best-selling author. Here's Jerry Robinson.
All right, friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. Today, we are moving into episode number 429. Today's episode entitled Gold Rush 2023. Basically, we're going to be talking about physical gold today. We're going to be talking about precious metals, mainly gold. We'll talk a little bit about silver as well. And I'm going to be joined by my longtime friend, longtime sponsor of the show, Tom Cloud, who's been a precious metals advisor for a long time. He's been helping people with gold, silver, palladium, platinum, diamonds, various gemstones for a long, long time. Hard assets, really, is what he focuses on. And you've probably heard him do many interviews on this podcast before. Maybe you've also heard his precious metals market update that he's been doing now for practically a decade for Follow the Money. You can find those on our YouTube page, youtube.com/FTM Daily. But today, before we bring Tom on, because he's warming up in the bullpen here, we're going to bring him on in just a minute. Just want to talk about a brief overview of what's been happening with gold in particular in the precious metal space. And we look back and see that last year in 2022, it was a wild year and gold was pretty much flat, which when you look, for example, let's say 30-year treasuries that are down 30%, or if you look at the S&P 500, which was down nearly 20%, or whether you look at the NASDAQ, which was down, around 30%. I mean, you see, well, that's not too bad. A flat year, that's really not too bad. Already for 2023, the price of gold has risen nearly 5%. So we're already starting to see a decent year. And as we look out to 2023, we're of the mindset that we really do have, I think, a good setup here for precious metals. You have a declining dollar and declining inflation, which you would say, well, normally inflation would push gold prices higher. But right now, we've been in such a wild environment, and the inflation has really not been the kind of inflation that we've seen before. This kind of inflation was almost egged on by policies that were not necessarily external. You did have, obviously, problems in Ukraine. We had a war in Ukraine, which was devastating, and we had supply constraints, supply chain constraints. We also had China shut down for practically 3 years. We've had a real strange macro backdrop for gold and for many assets for that matter. And as we head into the into this brand new year of 2023, we think that gold is an attractive investment option. There's several reasons that we like gold. We view gold as a form of portfolio insurance. So to us, gold is not a get-rich-quick idea. Neither is silver. Silver obviously plays a similar role. It's a bit more edgy in the fact that it can certainly go up, quicker than gold, and tends to go up quicker than gold in bull markets. But nonetheless, both of these represent what we would say, would actually be something tangible, something real. And certainly gold is a store of value, been used as a store of value for thousands of years. It's liquid. It means you can easily buy and sell it on global markets. It allows you to diversify. So again, if you had all of your money in stocks last year, then, if you would have had some in gold as well, that would have kind of tempered some of the losses per se. And then, there's no counterparty risk with gold, such there is with, other investments. So that means that the value of the investment, the value of gold itself that you hold is not dependent upon the solvency of any company or any institution. You don't have any default risk with gold, unlike bonds and other forms of credit types of investments. And also, there is just the idea of physical ownership, allowing you to take physical possession of the asset. It's a pretty important consideration for many people today, especially now as we see many people understanding the importance, say, in the crypto space, to actually hold their private keys, We've seen FTX, for example, and some of these other, crypto exchanges that have, really screwed the pooch. I mean, people have lost big money by trusting these institutions. And slowly but surely, people in the crypto space are realizing, wow, we've got to keep our crypto off of the exchanges. We've got to keep physical possession. Well, that's the benefit of gold. If you own it in your possession, you have physical ownership. And that, that obviously makes gold attractive. Now, there's lots of ways to get exposure to gold, right? There's different ways to invest in gold. You can buy physical gold. That's the most traditional way. You could buy gold in the form of coins or bars or even jewelry. You can store that physical gold in a safe deposit box or with a professional storage company. You can also, sell it at any time. It's liquid, as we had mentioned. You can also get access to gold through exchange-traded funds, which are called ETFs. And that allows you to get exposure to the price of gold, but you don't actually physically hold the metal. Obviously, there's pros and cons to that. We personally prefer to invest in physical gold and then hold that gold, personally. That's why I don't like necessarily exchange-traded funds for my gold holdings. Now, if I just want to get real quick exposure to gold, then, certainly ETFs can play a role. I mean, just for trading purposes. But for my core long-term investment portfolio and the insurance that I'm wanting to put on that portfolio, I want to have physical gold, that is, again, no counterparty risk, no chance of seizure. It's all right there in my possession. You can also invest not just in ETFs, but also gold mining stocks. Now, that's a different way of investing in gold. You can get exposure to the price of gold through the performance of, say, a gold mining company. Now, we have a list of gold mining companies that we like on our website, followthemoney.com. All of our members have access to our top-ranked gold mining stocks, silver mining stocks, tech stocks, all of that right there on our website. But that's another way that you can invest in gold. Now, we're going to bring Tom Cloud on to talk about some of the global economic conditions that have been, kind of fostering this environment, which we think really bodes well for gold as we move into 2023. He's also going to talk about the dollar. We'll talk about the dollar a little bit as well. There's quite a bit going on. And by the way, for those of you who are interested in this topic of precious metals, we're going to be drilling down deeper later this week. Tom and I are going to be creating a brand new video that's going to be available on our YouTube page, on our Facebook page. We'll even email it out, but you'll be able to access that. And it's going to be an updated webinar, basically, on this topic about what we see coming forward in 2023 for gold and for silver. We'll even get into platinum. Platinum had a really good year last year and looks to have another good year this year. Very likely. Silver, too, we'll talk a little bit about silver in the interview, but also in the upcoming webinar. So be looking for that. We'll have it on our website, followthemoney.com, later this week. You'll be able to access that video. But without further ado, I want to bring on Tom Cloud. He's waiting in the wings, so let's just head into that interview right now. Joining us on the line today is our good friend and longtime precious metal sponsor, Tom Cloud. You've heard him many times right here on this podcast and also in his very own precious metals market update that he does on our YouTube page very regularly and has done for the last, Tom, I guess it's been 10 years. Great to have you here on the podcast again. Thanks, Tom, for joining me.
All right, Jerry. It's always a pleasure. Enjoy visiting with everybody and trying to bring them up to date with what's going on in my world.
Yeah, well, there's a bunch going on in your world now with gold and silver. I mean, 2022, Tom, let's start there. Before we get into gold and silver and everything that, that we see coming, let's just take a minute and just reflect back on what was probably the most berserk year that at least I remember since 2008. That was 2022. Tom, this was a year for the record books. Talk about your perspective, because you've seen many of these cycles. For those who don't know, Tom has been selling gold and silver and been advising clients on precious metals since 1977. So you've seen a lot of market cycles. What was your take of 2022? What did you make of it?
Well, there's a lot have been made of it, but the major thing for me is to see a secular market change again in my lifetime. And what we mean by that is we've watched from the height of the Jimmy Carter interest rates of 15% go all the way down to below 2% over the next 40, 42 years. And you can look at any chart and see the interest rates would just create a huge bull market for bonds that went on for 40 plus years. But to see what I call the biggest secular market change in my lifetime right now is going the opposite. Gold is now moving in as the insurance against that. We're now seeing the bonds that are still out there. Everybody in the world needs money. Municipalities need money. Corporations need money. Governments need money. Everybody's out there, so the pressure is on interest rates to go up. And we have to look at our portfolios and say, that interest rates are going to continue up, and the Fed has already raised them 4%. We're still expecting at least one more, and possibly more than that at some point changes. So it's very, very important that we do that and look at it that way, because, as I said, it's going to be now we're having financial advisors. A lot of them weren't even been through a secular change. This is their first time, and they're going to have to learn to listen, listen to it and see what happens. And that's what is the change of my lifetime and the change of most of them. So what we can say is you got to rethink, and I've come up with the term you've heard on Follow the Money, and that is diversified confidence. If you don't, in 2022, if you did not diversify, and most people didn't, I had a client come and say, I should have listened to you. I lost 24% of my equities and had 0% in gold. And if it had just been in gold that was up 1.5% last year in 2022, it would have cut his loss way down. So there's a mindset, Jerry, out there that the money management industry is not as far along as you are. They're way behind, but they have to change. They're not going to sit there and be able to buy these bonds and make 3, 4, 5% tax-free, and it's hard to compete with. But now people have to rethink it. So that's the number one thing that hits me, is just the secular change, and just watching the chart go the other way as interest rates go up and the dollar goes down.
In many ways, 2022 was somewhat predictable. I mean, you and I have been talking about the bond bubble, it seems like now, for years, and we knew that it was going to burst at some point. In 2022, Tom, when you talk about this secular shift, you have to certainly be talking about the long-dated bonds, like the 20-plus year bonds that saw, a 30% collapse in value. The supposed safe alternative, fall 30. It's like worse than a tech stock. I mean, that's outrageous. But of course, we've been talking about this for a long time. So the bonds really came down, and that was a response to the incredible spike in interest rates that we saw last year. Even though on a nominal basis, Tom, when you look at it, it seems like, well, they only raised them to about 4.5%. But when you consider that they went from 0 to 4.5%, that represents an incredible order of magnitude of increase that really destabilized the economic world. So when you look at the U.S. dollar right now, we've both been talking about how we expect it to go down over time, all things being equal. Well, it had a nice little year in 2022. Do you think it repeats in 2023 for the dollar?
Well, I think the trend changed on that. I'm not talking about a secular change. I'm just talking about a change. We saw the dollar, get up to, I think it was 109, 110, and now it's down to 103. We saw that reverse starting at the end of November, and actually watched the dollar, which drove gold up over $200 an ounce the last 2 months. So, I think the dollar, just to get down to 92, it's got another 10 points. So based on history, that's 30% up for gold. If the dollar only goes from 103 on the world index down to 92, it should give us a 30 to 36% jump in gold off of 1900. Now you're up 2,060, 2,000 2,100, something like that. So I don't think, and the other thing of that, Jerry, is just think when you've got a $32 trillion budget deficit so far, and here we are, going to see that be fought in Congress in the early 2023, and you look and say 4% up like you did a minute ago. If you have $30 trillion out there, you go up 4%, that's another $1 trillion extra in interest. And that's where we are right now. We're seeing right now they're trying to pass in Congress to get, they know they're going to get around $5 trillion revenue. Both sides of the aisle agree on that. Where they disagree is Biden wants a $7.5 trillion budget. He wants a $2.5 trillion budget deficit for 1 year. Never heard of in the history of civilization. So we're just out there now, secular changes, interest rates. People have looked at it for 40 years. They used to going one way and one way only. Now they've got to look at it. And I mean, we're seeing gold right now with the large money managers recommending it for the first time. We've had the two largest sales in the history of this company, 43 years, and one in December and one in January, and neither one of these people had ever owned any gold. But that's what's going on. It's just a huge change. But you're right, the interest rate, which comes off the dollar, tells me the dollar's going to go much, much lower. And I can't wait to see how this Congress first battle with the Republican Congress against the House Democrats, and see how you come out, because you can't go out and tell the public you're going to have a $2.5 trillion deficit, and you are if you don't cut some off the $7.5 trillion they're trying to get through. So like you said, it was wild and crazy last year. This year could be crazier with all the stuff going on with Trump and Biden and war, cyclones, hurricanes. I mean, this year, 23, I think you'll see more capital move to hard assets than ever moved in history.
Huh. Well, you're listening to the voice of Tom Cloud. He is a precious metals advisor. He's been helping people with gold and silver now for many, many years. And if you want to reach out to him, you can call his office at 800-247-2812. You can ask questions there. You can learn more about the products that Tom Cloud has. Now, Tom, you brought up gold. I want to talk about gold first, then maybe we'll take a little bit of time on silver as well. Gold we're certainly seeing a lot of people move into it. You mentioned your two biggest sales. We're certainly seeing financial institutions realize the need for it. And we're certainly seeing, we certainly saw a de-risking in 2022. Gold really represents insurance, as you had pointed out. I've always viewed gold as portfolio insurance. That's really always what I've seen it as. And I've always owned it for that purpose. It seems like more and more people are kind of tuning into that kind of idea. So physical gold, as we move into 2023, what are your thoughts on it? Have we seen the majority of the thrust of this now, or do you think we're going to see more and more as we move into 2023, 2024?
Well, I think, first of all, the volatility that we've had in gold that your listeners have listened to for the last 10 to 15 years, that is changing. It's just the volatility is going less and less because, I mean, you've just seen Goldman Sachs, J.P. Morgan, Morgan Stanley, these people fire over 12,000 employees. You know what they're counting on. They know equities are going to go down, and they're not firing those people because of gold. They're firing those people because they're moving to gold. And I think you're just going to see the thing pick up. And, of course, the Basel III agreement that we've talked about on your show over the last two years is finally here. And what happens, one of the reasons gold's up 6% this year in 2 weeks is the 30-ton purchase by the Chinese. And now that central banks can own gold and count it on their balance sheet at spot value, it changes everything. But the major thing it changes for your listeners and for me is the volatility. We're not going to have I'm not telling you gold's not going to go up or down. I'm telling you the volatility is going to be, the tendency is going to be up, and it's got a long way to go. And I think you get in there and look at products, and it's become a product game, and we'll talk more about that later. But I want to talk about gold and right now dealing with the major makers, because literally every day Dan works with me and my daughter works with me. They're looking over, major wholesalers that are market makers. If they buy something and they want to move it quick, we're in a position. So we've had an incredible last 12 months, and basically the model of my business has changed. It was forced to change and use more people and keep your doors open for deals for your clientele. But it just seems like now, about a third of the calls coming in are money managers that are looking at gold that have never looked at it before, and now they're forced to look at it because, as I talked about earlier, the diversified confidence. Just think of those words, diversified confidence. Are you confident that stocks and bonds are not going to go down again as they did between 10 and 30% on each index? And yeah, it could go down again. So you've got to get to a diversified confidence to get the percentage that you want in stocks, in bonds, in gold, in REITs, in cryptos, or whatever you're investing in. You've got to have confidence in it, because if you just step up and go back in, you're going to get caught in the middle of that secular change I talked about when we started the show. You're going to get caught with interest rates going up that most of y'all haven't seen in 40 years. And that's the way it is. So just remember, gold should have an incredible year. It's already off, as I said, a 6% start, and we're not even a month into the year.
That's true. I mean, and gold just hit, crossed above $1,900 for the first time in 9 months after that latest CPI number we saw. We got new, as you pointed out, we got new central bank purchases, especially from China, which you had pointed out. You got a rebound in jewelry demand. You've got limited new mine supply. You get the Fed, who's eventually going to move to this pivot and then, move to rate cuts. You have that sinking dollar that's, of course, going to respond to that. That all sounds and bodes very well for gold as we move forward. I think that's kind of a shoo-in from my perspective, too. But what about silver? What's your take on silver as we head into 2023?
Well, it's got a little wider chances, because certainly we know whether all the uses of silver in the industrial world, and if the economy can stay, even if it stagflation, very low growth and inflation, I think silver is going to have a good year. It's going to get the drag up from gold, which is very underrated, because it's very important when people come in the market, like these two big sales. They did about 25% in silver of the money and about 75% in gold. And I think when you look at it that way, if we got out and got in a recession, because the interest rates just keep going up worldwide and choking off the economies, then certainly silver has a chance to stall or go down, where gold is the best recession hedge. And that's been proven over and over. So we just got to watch that. That's going to take a little more homework as to how silver's going to do. But I will say, and I haven't said it very many times, I now definitely see $50 silver in my mirror, or my crystal ball, if you will. I've been one of the last people in the industry to say it's going back to 50 for the third time, but I'm saying it's going to go back to 50, and it may go the last $10 or $15 of that in a few days when that time comes. But the only thing standing is this big blockade that says world recession on it, and we've got to crash through that. As I said, gold will continue to do well, but silver in that case would fall back down.
Yeah, that's true. We got to point that out, that the nature of silver being both an investment metal and also an industrial metal. But in its favor, Tom, I did read in the Silver Institute put out a report back in November that showed that global demand for silver is expected to rise and create the biggest deficit in decades. Do you consider that to be legitimate from what the Silver Institute had put out as far as the deficit in the supply of silver?
Well, yeah, but the only problem I've ever had with the Institute's numbers are, they look at it and put out. I found it, not to say it's inaccurate, because that wouldn't be a correct statement, but it's not as accurate as it could be. So I'm a little iffy on it. I mean, certainly a miner can turn his mine on or off,
right?
So to say, if he's not getting any business and the economy's bad, then it drops off a percentage, but based on what happened last year, that's a very true statement. If we had another year like last year, even though silver was down last year at one time 20% and ended up 1.5% for the calendar year of 2022. So yeah, but if that keeps going, then you could have the Institute could be right, because there'd be more demand for it, and they could push it down.
As I mentioned, you're listening to the voice of Tom Cloud. He is a precious metals advisor. He's been a sponsor here with Follow the Money for the last decade. Well, I want to encourage anybody who's listening to reach out to you, Tom. If you would, just quickly share with them what that process looks like. Many people maybe have never even thought about buying gold or silver. Explain to them real quickly how easy the process is and what they need to do.
Well, you just call us at 800-247-2812, and we'll walk through what you want to buy. Some people maybe want 75% gold or 50% gold if they're younger, of how much they're considering investing. And then when you do, we email you an invoice, and you send us back your check and pay for it, and we send it to you. We pay all the shipping for FTM clients and always have. So you'll get that at no charge. And basically we'll go over the products and the premiums, how much over spot you'll pay, and how much of it's ours and how much of it is the wholesaler we buy it from. We full disclose everything to you, and then, like I said, the order goes in and send the check, and we send you 3 days later, we send you the metals, and you can take delivery of them personally, or we've arranged for the lowest storage rates in the world in IDS, Delaware, and IDS, Texas, where you can store for very low rates that we're not even supposed to mention to the public without talking to you. But our storage rates are the lowest in the world, and probably the best warehouses known in the world. They're both COMEX warehouses, which are the best kind. So it's real exciting for that. But that's how simple it is. And when you're ready to sell, you call, we lock it in, we tell you where to mail it, and we can wire you money, overnight you money, and you can get out just very quickly, as quick as you want to get out, really, if you pay for the wire and all that.
More people, Tom, are tuning in and turning on to the idea of actual hard assets, where you actually buy something and then you get to hold it. It's something that's real. It's something that's tangible. And that's what gold and silver represent. They represent a put upon the Federal Reserve. They represent a put upon the U.S. dollar. And I think the good service you provided our members over the years and our listeners has just been phenomenal. So anybody listening, if you do buy gold and silver, perhaps from someone else, you should give Tom a call and check the prices, because I have found that the majority of people who check with you, Tom, they find out they could save a lot of money, especially if they're dollar cost averaging into silver or gold, or even if they just want to buy a lump sum, that they'll find that your prices are very competitive, if not much cheaper than other places.
We just had a guy do a 5-company thing, and 2 of them are on TV, and I mean it was amazing just to sell the same product. We were 3 to 6% cheaper. I mean that's just crazy. People paying all that extra money to help people cover those TV ads that cost so much. Exactly.
If you want to talk to Tom Cloud, don't forget, give him a call, 800 247-2812. Dan, Kathleen, his whole staff is there ready to help you answer questions about gold, silver. They also sell platinum and palladium, and we'll be talking more about platinum. Tom, I know you're excited about platinum as we head into the new year. All right, Tom, great to have you here, my friend. God bless you. Thank you for joining me.
God bless you, and thanks for having me.
All right, friends. Well, welcome back to the final moments here of today's broadcast. I sure hope you enjoyed today's interview with Tom Cloud. He's got a lot of insights and a wealth of knowledge on when it comes to precious metals. There's just not too many people today who have been helping individuals just like you with gold and silver for as long as Tom has. He has a wealth of experience, and I do encourage you to give him a call if you have any questions about anything that you've heard today regarding gold, silver, palladium, platinum. And don't forget, we also have an upcoming video that'll be available to you on our website later this week. On Friday, you'll be able to go onto our website, followthemoney.com/gold 2023. Gold 2023. And if you go there, you'll be able to watch the entire video that we are going to be doing. We'll be covering a lot of topics: the US dollar, gold. We'll be looking at a lot of charts, a lot of graphs, and just really drilling down deeper into what's happening. You know, there's a lot of things that go into determining what the right amount of gold to include in your portfolio is, and that's something that we're going to be also talking about, is how to discover, you know, what's right for you. How much should you have in gold and silver, and how much should you have in that asset class? So be looking forward to that upcoming. Be sure, if you want to watch that video, you're hearing this podcast now and you want to go back and watch that video and it's after Friday, then just go to followthemoney.com/gold 2023 and you'll be able to watch the video right there. All right, friends. Well, with all that said, that brings us to the end of today's broadcast. It's been wonderful to be here with you. And as always, I'd like to leave you with a final word. And this time it's just a thought. And that is that if you want to feel rich, if you want to feel wealthy, just count the things that you have that money can't buy. You know, the truth of the matter is, money is not really what makes us happy. If we had money but didn't have health, we wouldn't be happy. If we had money but didn't have love and friends and caring spouse or caring children, if we don't have good relationships in our lives, then money really doesn't matter, right? We want to really be thankful for those things that we have as we enter this brand new year. Think about the things that you have that money can't buy. Be appreciative for those things because we know they can slip away. Nothing is guaranteed and tomorrow is not promised. So be grateful for what's in your life today. Those things that are not money, but that are so much more valuable. And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.